Hey, we're live, Adam.
Hi, Paul. It's Esso. How you doing, folks?
Happy Friday. If it's Friday, Adam, what does that mean?
That it's happy.
It is
It's
happy.
time to learn a little.
Right. Who are we going to talk to today? We got an exciting guest.
Exciting guest.
Way smarter than we are.
That's right. We have Gene Trowbridge on the show today. We're excited to have him. We'll talk a little bit about our first contact or knowledge about Gene during the show, but got a lot of experience to share with folks, and he's going to share some really good insight and info on getting investors to say yes to your investment.
Right. Gene has a really interesting background. He was first on just the brokerage side, syndicated a bunch of deals as a sponsor himself. And then he strangely went to the legal world, which, you know, all of his peers were probably wondering too. And then now he does advises clients on raising properly and gives all sorts of good content. We'll even share with you the book that he's written because that's really great. There's a ton of good knowledge in there. So without further ado, let's bring on Gene himself. And voila, it's working. Gene,
there I am.
Okay.
How's it going? Happy
Friday.
I'm going to shake hands with you right over here.
That's right. Yes.
Nice to see you. Fist bump. Right.
Elbows.
That's great. Thanks for having me.
Yeah, of course. We're flattered you carved out a little time here. We do similar. We have similar pursuits, but your book we'll talk about a little bit later was, it really lays it out well. So we'll talk about that a little bit later. We introed you, kind of your background. You probably heard us rambling on. Why don't you share a little bit about, your career in commercial real estate?
Sure.
And, what you've been up to.
Well, as you can tell by the color of my hair, it's been a long career.
Not true.
I started out, came out of college as an accounting degree, but didn't want to go to be a CPA or anything like that. So I thought I would be a salesperson. And in the early 1970s, back in Minnesota, one of the biggest things you could sell, if you weren't an engineer or something like that, was houses.
Cool.
My God, those houses were selling for $40,000, $50,000 each. That's a big commission, 6%.
Yep. Yep.
So I went off to sell houses, and after about 2 or 3 years, understanding I didn't communicate with husbands and wives very well buying houses, I went off to the commercial side of the real estate business and did that for quite a while. And then in 79, we moved to California, and I decided to devote my full time to being a syndicator. And then that took me till really 1995 when I decided I'd had enough syndication, and I went to law school with, a wife and 2 kids, and we were both working, and I went to law school all the time.
Wow.
Because I said we're at the kitchen table, where all the great decisions are made. We're at the kitchen table, and I said, what am I going to do for the next 15 years? I'm tired of doing this. And we've made a lot of money. I had some freedom. And I said, well, for the next 15 years, I think I'll go to law school. And so that was 27 years ago. And wow. I still do it. I went to California and passed the bar the first time, and hung out my individual shingle as Trowbridge and concentrated on securities law. The only thing I've ever concentrated on is securities law. And here I am today.
That's really cool. And so you had syndicated, a number of deals. How did you, now, there's just so much information. So you could kind of get your arms around how a syndication works if you spent 3 or 4 days on Google, getting kind of the kind of simple stuff of a syndication now with the internet. Like, how did you figure out how to do it, back when there wasn't the internet that you could just, or your book or something similar to that? How did you get started? Did you have a mentor, or how'd that start?
Well, first of all, I did it wrong. And so that's always the good way to learn.
Right.
The first, we all get to be syndicators because somewhere along the line we find a property that we'd like to buy, but we don't have enough money ourselves.
Sure.
And are you hearing a background noise?
I'm not.
Okay, hold on. I'll be right back. Audience, don't go away.
Audience, sit tight.
This is a cliffhanger.
This is that's right.
That
This-
comes free.
This is live TV right here. Commercial break. Cut to the commercial break.
There we go. Okay. Well, thanks a lot, and be sure to patronize our sponsors. Okay.
That's right.
Somehow we.
Absolutely.
I had bought some real estate on my own, but I hadn't bought anything big. And here comes something that was a little too big for my wallet. So I went to 3 guys I'd gone to college with, and we all put in $10,000 each, and we bought a building. But I didn't know that that was a syndication, and little did I know that that was a security. But
Yeah.
I started, I did that a couple times. I said, I kind of like this. Maybe I'll study a little bit about that. And so I learned, went to bookstore, bought some books, and started talking to the attorneys who represented me and learning. And basically, I learned everything about syndication from my attorneys before I went to law school, which is good because in law school, they didn't teach me one thing about syndication.
No.
The word security never came up in law school. But
Right.
after I passed the bar, knowing all about family law and divorces and criminal law and all that stuff, I was able to go to work right away because I knew what was going on. I even had papers. I had my old offering documents.
Sure.
So practical experience is what got me there.
That's really good.
Yeah, it's great. Talk a little bit about some of the point where you kind of figured out putting this stuff together. Was it a lawyer who just happened to mention, hey, you know what you're doing? What was the point when you realized you were selling a security?
Yes, it was when we hired a lawyer to do our operating agreements. So the first couple, I did our own operating agreements.
Mhm.
And then as I went on to do a little bigger deal with people that I didn't know, maybe, I went to another attorney and hired an attorney, and he told me, he trained me. So that's good.
Yeah, it's good. It's funny because we haven't been doing this for 27 years, but it's still very common for people who have done it for a while to not really know what we're talking about when we're talking about security. And it's probably more. I would suspect more people are doing it now than they did 30 and 40 years ago as far as filing.
Well, this is the call you get, because I get the same call.
Yeah, sure. Right.
Here comes the call. Hey, I want to put together a group of 5 or 6 people, and I want to buy a property, but I don't want it to be a syndication.
Yeah. How do we get around that? Yeah. I don't want to pay you, but give me all the good advice, please.
No, they don't want it. And I said, well, you can't get around it being a syndication because there's 2 people pooling their money and their resources, and that is a syndication. A better question to ask me would have been, how do I do it without it being a security? And then I have to teach them what a security is, and then tell them that, you're not going to get around that. You want to make all the decisions. You want to get paid. It's a security. So welcome to the world.
Right. Yeah. And I kind of, I analogize. It's just like, you're paying for insurance on the property. It's not all that different than that. If you're going to put of millions of dollars together, you better make sure the thing's insured. Same goes with putting the securities paperwork together. You kind of hope it's a waste of money because you hopefully never run into a problem. But if you do, you obviously want to make sure you have it done.
That's right.
Also doing business. Yep.
Yeah. Or what's also fascinating is that they want to raise millions of dollars, but then not spend the thousands necessary to.
Right.
Right.
It's amazing, isn't it? And I have some empathy because
no, of course,
the members are going to pay for it eventually.
Right. Yep.
So I understand you're trying to do the best for your members. I don't get in a bidding war very often, but I do once in a while, and I lose out because I don't come off my price. We charge a flat fee like a lot of attorneys do, and I just don't come off my price and go right ahead. I learned that from selling real estate. When you had a really bad client, a really difficult client to deal with, you just refer them to your best competition and let them worry about it.
Yeah. I figure if it's somebody haggling over a few $1,000, it's not somebody I want to spend much time with anyway. So
that's what I did. I went to school. When I came out of law school, I just put up my shingle and started advertising myself as a syndication lawyer. And I knew, I knew a lot of people during my during my career, I spent 40 years teaching CCIM. I knew all sorts of people. I did workshops, education-based marketing. And I would do workshops just for syndicators, not for the passives. I didn't care much about that, but for the syndicators. And I built my network and my database that way. So
that's great. That's good. Yeah, we like to talk also about just your thoughts. You had that career, a lot of experience there, leading those workshops and doing all kinds of things. You went from residential to commercial, and then you went into a legal career. Just wondering if you've seen where some things from that your past career translated well and maybe gave you a step up outside of obviously having done a syndication, gave you a step up in terms of being a lawyer and some of the things you need to be a successful, good lawyer. Any thoughts on what's helped you there?
Well, all that molds into when someone starts talking to me about their deal. I mean, I understand the real estate part very much. I understand the real estate part, and I understand how the documents need to be done. And I also understand, the raising money issue. At the height of my insanity, one year I sent out 1,687 K1s.
Wow.
I had about 850 investors. So on an average, they all had 2 investments with me. And that was before any of the back office companies that are around today. So I just came home after tax season. I said to my wife, if I'm going to do more of this, I'm going to have to get a bigger staff and more office space. And I think I've done enough. I think I'll move on. And if IMS or one of the other companies had been around then, I might have signed up with them and let them do all the work. But we weren't that far along in the industry. So I just thought it was time to quit. So yes, I can understand. In fact, I called a client last week. When I do my deal structure interview with them and I asked him all these questions, he said he was going to promise a certain preferred return. And then he explained the business he was going to be in. He was going to do some lending. And I'm in the middle of drafting the PPM, and I called him and I said, I don't understand this, but based on what you told me you were going to do, there's no way you can promise that return. There's just nothing you can do. Well, what about the foreign currency exchange? And I said, what about the what? Oh, yeah, 25% of the money that we're going to raise, we're going to use for foreign currency swapping. I said, that's great. I would, and of the 25%, they're going to hold back 15% for reserves in case it doesn't go right. But with the 10%, they can do pretty well. I said, okay, that's great. There's more to this than I need to know, right? So.
Yeah, right. Yeah, it's those interviews are very important. It gets especially tough if they leave out important information like you're going to be a Forex trader also in lending. So
right.
Yeah, that can make things tough. So one of the things we were hoping to talk about was, the importance of selling your deal, selling the Sizzle for folks. And if you could just kind of quickly, what are some of the most important parts of, setting the groundwork with your contacts or already invested partners on getting folks interested in their real estate?
Well, I've got some slides. Let me show you some slides.
So happen to have a few slides here on our smart board. So, wow, look at that.
That's me, right?
That's a fast runner right there.
That's a guy who's carbo loading. Tell me about that.
It's not true. Good. That's fun.
So in my steps to do the first deal, I'm down here at the second step, and I'm talking about building a database with 50 investors with a 50% chance of investing 50 grand. And so if I had this database and 25 of them gave me 50,000, I'd be at $1.25 million, which should be enough to do your first deal. You shouldn't be doing a $10 million your first time deal your first time because you don't know if you're going to be successful. So that should really work. So here I am. Here's what I think we need to do. And I learned this myself when I was running around. The minute I had the offering circular or the PPM, I was out hitting people over the head with my documents to buy. And all of a sudden it occurred to me that I was getting a lot of no's. A lot of people were just kind of turning me off. I was talking to people who, heaven forbid, weren't interested in real estate.
Boring.
So how did I know? So I came up with this approach, and it's first of all selling the sizzle of real estate, then selling the sizzle of your part of the market, then selling the sizzle of you handling their money. Then when you have an offering, they're already pre-sold. They might want to look at the specific deal, and they will, but you probably got them in your hand. So the first thing is selling the sizzle of real estate. You have to have a story. Why would people want to be in real estate? And I've got some stuff up there. I think it's the ideal investment, which is an old acronym I know. If I'm talking to a guy who only invests in Bitcoins, I can stop that conversation right now because they're not interested in real estate. So I'm building this pyramid. I'm building this pyramid with all the people I can talk to who are invested in real estate. Give them a chance to become diversified and an opportunity. And you can talk about all the wealth that's been built in this country through real estate investing. I think that's an easy, non-threatening conversation to have with someone first. Then I got to get into a little more. What's the sizzle of your part of the real estate world? What part of the real estate world are you an expert? And show the opportunities you see in that part of the world and show the solutions that you propose. Well, I was selling blind pools, if you will, to build 2 self-storage facilities in each fund. I might have purchased one piece of land, and then we'd go out and raise the money, and we'd build the facility on that piece of land, and then we'd raise more money to buy a second piece of land, which was unidentified at the time, and build another storage facility. So I was an expert in building storage facilities. I always laugh. I knew how to pour concrete, which is what you need, and I knew where to buy the metal roofs and the metal doors. And if I could sell the project who did I sell them to? The guys with the orange doors, Public Storage. If I could sell them to Public Storage, I knew the color paint I needed to go.
Yeah.
And so in that part of the market, what you're selling is building your net worth. You're not selling a check every quarter for your groceries, because we're simply going to buy the dirt, build the property, get it 50% rented, and then sell it to a long-term operator.
Great.
And so that was an opportunity, right?
Yep.
And so I saw that opportunity, and I built a story around that opportunity. And then the next part of selling it is the sizzle of having me, manage your money. If you're going to invest in something, why would you want me? Well, you'd want me because I've got a plan and a team that's going to attack that opportunity. The opportunity is to take dirt, build storage facilities, and sell them to long-term operators. That's the opportunity, because a lot of the long-term operators at that time were not building their own. They were just looking for projects. And there was a lot of cement block projects, or a lot of crappy projects out there. And so I came into the marketplace building concrete tilt-up, which is what you see now, and actually attracted Public Storage to buy most of our projects until they decided that they wouldn't do that anymore. Then they saw that there was some value, and they started doing offerings to buy the dirt and build the projects for themselves and pass that equity to their investors. So that's what I have to talk about me and my credentials, introduce my team, show that you have a core group that believes in the opportunities and can provide the solutions that you see. And here I can talk about prior results. I'm building a substantive relation with these investors. I got them at, what about real estate? And I probably gave them some sort of a pre-qualification questionnaire so I could get them to sign it, and I could get them in my database. So I've solved the pre-existing issue, and now we're getting to know each other. So when it's time for an offering, I can truly say we have a substantive relationship.
This guy knows
Yeah.
what he's doing. This guy knows what he's
Right.
doing. That's
Yeah.
it.
And so the second one, here's the opportunity. Well, they're going to ask me all about that. And then the third one, well, we've assembled a team and we can do it right. So they're going to ask me about my track record. That's about what they want to know. Have you done this before? You can put up any money in there and what the hey. So that worked. And then now that I've done all that, I can present the offer. And I always found that when I was presenting the opportunity to them, I would only pick on 3 or 4 things that were sizzling about the opportunity, not the whole goddamn book, excuse me, not the whole 160 pages, but 3 or 4 things that benefits of the offering that would be interesting. How does providing the solutions you have identified make the investor money? Okay. Show how your team can manage the deal, and then ask questions of the investor, and then ask for the order. And I think this is terribly important because before I put this together, my pyramid was upside down. Down here in the bottom, the first time I met the person, I asked for the order.
Yeah, right.
Eventually, I had to talk about me, and eventually I had to talk about self-storage, and eventually I had to talk about real estate. So if you believe in building rapport and building a relationship, you just turn that the other way around. And it's not that terribly difficult to present the offer when everyone already knows what your strategy is and what your team is and that you've got a track record. I think so that's what I think. I do use the word sell when I talk about sell the sizzle, but I'm really big on, or at least I was when I was doing that, presenting an opportunity to the people. And the line I used to use was, boy, if I had all the money I needed to do this deal myself, I would.
Sure.
Right.
But I don't. And so I'm going to provide you with an opportunity to get in on this deal.
Yeah. And sharing the benefits, right? So yeah, no, that's great. I think a lot of people ask that question about, your first slide of having at least a database of at least 50 who have a 50-50 chance of investing and, 50K or whatever amount they might be able to invest. Because I know a lot of folks getting into real estate don't know where to begin, and that's a good spot to begin. Start building that.
Oh, that's a great. You got to have a database. You got to have someone to talk to when we give them the documents. And I think that depending upon what market you're in, $1.25 million should give you a good start towards your first syndication. Further on in those steps, I say make your first syndication about $1.5 million of what you're going to raise. So if you've done the work on the database, you should have some confidence. Now, if your market is people that only have 25,000, then you might have to have 100 people in your database at 50%. Yep. And if you're in Southern California, you might have to have $100,000 investors in your database. Depends on where you are and the price of the properties and what you're doing. Yep. And that's the catch up. That's the hang up. I have people come to my classes. They're all gung ho. They go back and I follow up with them 6 months later and they say, well, I've been so busy looking for properties, I haven't built my database.
Yeah, right.
And I said, well, you're doing it the wrong way.
Totally.
Build your database first.
We tell people all the time, the hardest and least looked after part of syndicating is raising money. Most people think it'll, it's such a screaming deal. I'll just have people scratching on my door. That I've never seen that happen before. So you really take a lot of work.
And that's the problem with presenting an offering to someone that you really don't know or haven't built a watch, because you say, my offering here's my fact sheet. It has a 16% IRR and a 3-year cash out. And you haven't even told them what it is yet. And the guy said, that's all right. I've got a couple in my briefcase that I picked up from a guy yesterday that has 20% IRR and 18-month payout. So I'm not interested. Well, what was his deal? And then I don't know.
Right.
I don't want to do that.
Yep. So building a database. The other thing people, I think you touched on, the other thing that people skip over is the story is really building that. You mentioned a number of elements of it. Your story, and then also just the offering story.
That's right, and that's what I think the PPM is. Yep. I do my interview with the people, and then I do the PPM first, and I send it to them, and I said, want to know if I have your story right.
Yeah, sure.
If I have your story right, then I can draft the operating agreement with the rules.
Yep.
Another thing is that I've got your story wrong in the PPM. I've got it wrong in the operating agreement. I've got it wrong in the subscription agreement. They think I'm a fool. So I'm just going to give you one document and you can
Right.
tell me where I'm wrong.
Yeah, that's right. Yeah, leave it up to them, you know.
Gotcha.
Right.
No, that's really good. And another thing I think is important you mentioned was knowing kind of about the area that the deal is in, you know, have some backgrounds, kind of, you're gonna have to sell on the community that it's in maybe, or some of the up and coming stuff. From our side, we see that pretty often that people, you know, are picking, they got one deal sent to them. They think it's a really good one, but they've never really spent any time there. They don't know, you know, they haven't talked to the city or the building department and don't know much at all. I mean, have you seen that being a problem?
Oh, absolutely. I think that the flow of capital in the last 6, 7, 8 years has kind of diminished that importance because there's just so much money out there. People are investing. And I was talking to someone yesterday. They were talking about what responsibility does a passive investor have? And I said that I think the passive investor needs to take the responsibility of educating themselves about the asset class. The syndicator is not going to train you all about apartments if he's an apartment syndicator. And if you want to invest in apartments, go somewhere. There's a million places, like you said, online and meetup groups and whatever to go learn about apartments. Or if it's a mobile home parks, go to the Mobile Home Park University and learn about mobile home parks. Come to this position where you're ready to invest some money with some knowledge about the asset class. And I always go back to a sophisticated investor is supposed to be able to read and understand all this. Well, I think the word sophistication depends upon the asset type.
Sure.
You know, if you're going to buy a 16-unit apartment building that's been 100% rented for 5 years, and you're not going to do anything other than just carry on, or you're going to go out and buy a piece of dirt and build 600 storage facility units on it, I think it takes two different levels of sophistication.
Sure.
And I think that a lot of times our clients don't really buy that. You know, oh, the guy's a CPA, he can do that. Yeah, he's a CPA. He's a cost accountant in a widgets factory. He doesn't know doodly about real estate.
Doodly.
So he may be a professor at the Chicago School of Business, but he doesn't know anything about real estate. Right. So what does sophisticated mean? I think it's a moving target.
Yeah, I think syndicators do themselves well by having ongoing communication, because then you kind of can set the expectation, you know, for when people, you know, can see an email coming from you, and you can kind of understand where they're coming from. Like, you know, you don't want them calling you in a panic if they think your silence means you ran off with their money. So
no, and that's what they think. They think you have their money. There's no question about that. No, I think that in any type of selling, there's a part of it that is educating. It is education. And my Sizzle approach, I believe, gets all the education out of the way first before we go into the specific offering.
That's great. All right, now for the next part of our show, what are we doing here, Adam?
This is going to be let us know about that photo.
Yep. So we're going to pull up a couple. Let's see here. We're going to pull up a photo from your social media, and you're going to tell us what we're looking at. What are we looking at here, Gene? Who's this guy?
An old guy. Oh, I will tell you exactly what it is. I am getting ready to run the 2020 Kauai half marathon.
Wow. That
we're doing virtually in Temecula, California.
Wow.
We all, because I've run the half marathon in Kauai. Well, this would have been my 12th one in a row because there've only been 12.
Good for you.
So we couldn't go to Kauai, so I got the whole office team together and we went out to Menifee, actually was the name of the town, and ran around a water reserve. It was 117 degrees when we finished. It was over Labor Day weekend last year. It was just excruciating. But I'm practicing distance. You know, there's no other runners around me. I've got my mask on, which came off as soon as I started running. And I've got those good 72-year-old legs stuck in some compression socks.
There you go.
Do this. I've never worn the socks. Do the socks work pretty well? You like them?
Yeah, I wear them anytime I run over 6 miles.
Good for you.
Because I tend to cramp a little bit when you get to, I've never done anything more than a half marathon, but I have had a few times at 11, 12 miles I'll cramp. So they're good.
Nice. So that's the before. How'd you look after 117?
Yeah,
About-
were you racing at the end of that thing?
Oh, right. Sprinting, sprinting to the beer, that's for sure. No, I was about probably 4 inches shorter. I'll tell you, my watch tells me what happened. I burned 2,800 calories in that race.
Wow. You're like Michael Phelps of California running. That's amazing. That's great, man. All right, we got one more to look at here. Let's pull up the next one. This
is a cute idea. This is very good, guys.
Good.
Yeah.
All right, we're glad you.
We borrowed it, so feel free to borrow it.
Yeah,
as well.
we stole it from a guy on YouTube that does this hot ones chicken wings question thing. So it's actually good. All right, now we got to talk to you about this. What are we looking at here?
That's my book.
That's right.
That is the crowdfunding edition.
Yeah, we funded that trip to Kauai. Am and I both have the book. So
that's why I had to stay in that hut, because both of you bought, and I think it was $58 combined.
That's right. Yeah, that's right.
So yeah, that actually is the third edition of a book that I wrote. My first one was 1995. And it was different. It was a 3-ring binder with a lot of pages, and I used it when I taught live, and had a couple of CD discs in there of documents and everything. And then the third edition, the crowdfunding edition, came out in 2015.
Very cool.
Basically, right after they did the Jobs Act.
Sure.
And I'm working, as we speak, I'm working on edition 4, because there's been 2 or 3 changes from the SEC that have happened recently, with the purpose of making capital formation easier. So that's it. It's a whole new business. It was written for real estate people who I knew who didn't understand, when you put together a group to buy a building, you are leaving the real estate business and you are entering this world of securities.
Yeah, no, it's really well written. It's, and we have a different point of view, but it's actually pretty fun to read, which I don't think there's ever been a law book any fun to read. So that's good stuff. And this is obviously available on, Amazon and wherever great books are sold.
Right.
Hey, I want to ask you about, there's this new proposed finder fee. What is your thought on that? Do you think that'll help? Do you think that'll hurt? Do you think it's even going to go through? The SEC's thinking about allowing non-broker dealers to get paid to raise a few bucks. What do you think of that?
I think it's a big abyss of potential violations. I hope it doesn't go. I hope it doesn't go through. I don't know if you know this, but this is live, hot off the press news. There was an article yesterday on one of the services that I read, I subscribe to, that says that President Biden has signed some sort of a financial markets executive order that tells, or at least gives everyone like the SEC a chance to put all their changes that have happened in the last 6 months on hold and revisit them. Because right now, for example, the SEC has 2 Republicans and 2 Democrats, and he's going to appoint the new leader of the SEC. So it'll be 3-2. And the last issue that came out, and it was just published in January, the one where they raised the Reg A offering to 75 and 504 to whatever in crowdfunding. They're supposed to look at that and see if they'd like to maybe put a hold on that, which might change a lot of things. And so the article was very concerned about that approach might not help capital formation. But one thing they did say in there that I've been looking for, I've seen some statistics, but I've been looking for a statistic that said this. The SEC in there was quoted as saying that the money raised in private placements outpaces the money raised on Wall Street.
Wow.
In the last 12 months, they studied it, and this is about a year old, this study. 1.8 trillion was raised in private placements, and that's 7 times the total amount of all the IPOs raised on the stock exchange at the same time.
That's wild. Holy cow.
So there must be a few people out there who need offering documents written, right?
Yeah, that's right. Hopefully they're doing it well. Yeah, I don't know.
Not all real estate, but
sure. Yeah, I just wonder how the finder fee, as someone that might be doing the capital raising, like, I don't know that I trust the finder to have done all, to make sure these folks are, you obviously have to run them through all the sophistication questions and, qualify them as accredited or not. But I don't know. I just feel like having the middle person in there might muck it up a little, and even complicate it more than maybe it needs to be. So
yeah, I didn't think it was a good idea, but
yeah, I don't think it's going to help. I don't, I think your chances of marrying someone's money to your project if they don't know you at all isn't great anyway. But
that's right.
I guess.
Well, what I like about it is I like it might stop some of the stuff that's being done now that's totally illegal. One of my favorite examples is a syndicator who I don't do business with, had 18 people in their last managing member LLC, and he had each one of them sign a contract that said they had to bring in $500,000 in order to get a percentage of ownership that he was promising them.
Oh, geez.
And how did I know? One of my clients called me and said, "Hey, this guy wants me to sign this. Will you look at it?" I said, "Sure, send it to me." Because our clients are tattletales. That's all they are. They're all looking for the other person who's doing something new and greater.
Yeah, hey, this guy's doing it this way. Am I allowed to do that? I'm like,
yeah, that's what he wants to do. I said, "Holy cow, no!"
You can do it illegal too if you want. Sure, go ahead.
Yeah. So I made a Facebook post about that. Got a lot of viewers. I hope they were the right viewers.
Yeah. Wow, that's wild.
Yep. Well, it's a serious business. You gotta do it the right way. Shortcuts are not the right way to do it. So yeah.
No, and another thing that I'm running into now, I wonder if you guys have, where the sponsor has literally gone out and raised extra money from the investors with the purpose of sending the investors checks back during the construction period when the property isn't producing any income.
The old return of
the old return of, which I think I'll caution what I say, depending upon how it is described in the PPM and what the disclosures are. I think that's fraudulent.
Sure.
I do have a client, a very good client, who does a 12% distribution, and he does 12% on every single deal. And it's 8% preferred and 4% return of.
Okay.
We tell everyone that.
Yep.
Tell everyone that. But I do know that there are guys out there who say, well, the people like it, they like to get a check. So I just raise extra money from them and send them their money back every year in a check. Well, I think if you're not explaining that wrong, I think you're in trouble. Plus, that $100,000 or $200,000, that never gets in the deal. It never is used to make any money. But your preferred return is based on investing all of the money you raise, not just part of it. So, man, that's scary.
It's getting close. Yeah, you see that sort of stuff on TV, and people get in big trouble. So, yep, you gotta watch it. Well, we appreciate all the time. Do you have any?
Yeah, sure.
So we've talked about this stuff. What can you, what else are you doing? What else do you want to share to folks that you're up to outside of obviously raising capital?
Well, no, I'd like to share that we have a YouTube channel, and right now what we're doing is we're populating it with interviews. I call it TLG Talks, Trowbridge Law Group Talks, and I've interviewed 17, 18 people now for about a half hour that are in the securities business that I know of or support the securities business. I interviewed a very successful real estate broker who would never, ever be a syndicator. And then I interviewed a very smart young lady in the city of Atlanta who wants to do her first deal, but she can't pull the trigger. She just can't She just can't do it, and she'd be great. I know she'd be great. So those are on our YouTube channel, which is Trowbridge Law. And then since this is being aired currently, I will tell you about my rookie camp. I do a session every quarter where we take 15 people in, and we do it on Zoom, 3 hours on Tuesday and 3 hours on Thursday. And I give them basically what was my live one-day class, the last time we had live one-day classes. And it's great. It's rookie, and you can find that information on our website.
Great. Yeah, we'll throw it in the comments after this thing's over.
Okay, that's it then.
Well, great. Well, appreciate all the time, man. Great talking to you. And we need to, after we unlive this thing, we're going to keep you on. I want to ask you a question about something else we'll need your help on.
Yeah, that's right. So thanks, Gene. A lot of fun.
Thanks a lot, Gene.
Appreciate it.
Thank you, guys.
Thanks, folks. Take care.